Good evening. Today's wake up is as follows. Today, as we saw, the Indian equities market witnessed a gap down opening today after the US 10-year bond yields were seen soaring overnight as inflation in the United States could see upticks from here on. This would give the Fed enough room to raise interest rates, thus putting pressure on the emerging markets as they would see a liquidity squeeze. The sentiment in the market was clearly negative today as Nifty breached consecutive supports to close near the low point of the day at 8296.30 levels, down 2.69%. The India VIX spiked up over 12% to end at 70.37 levels, the highest closing since 29 September 2016, the day of surgical strike, indicating nervousness among the market participants. On the sectoral front, there was no sector that closed in the green, with all of them closing with negative returns. The ones that dragged down the index lower were auto, FMCG, and banks, and at 4.50 to 2.50% lower. The advanced decline ratio was quoting at 112 to 1369, suggesting the weakness was observed across the market and not just to specific sectors. Tracking the global markets, Shanghai and Nikkei were the only two Asian peers that closed on a flat to positive note, bucking the negative sentiment. Barring the DAX that held on the marginal gains, European markets too traded with a bearish bias, mirroring the negative sentiment in Asia. Technically, Nifty has closed below the 200-day EMA on the daily chart, which was last seen on 24 May 2016. The index is likely to remain under pressure and trade with negative bias unless 8600 to 8620 is not taken out on a closing basis. Going forward, immediate support is placed at 8180 to 8200 levels, below which 8000 could be tested. Resistance now comes at 8400 levels, and above that 8480 to 8500 levels from short term perspective. Thank you.